forward.
Hi, good evening. Today is Tuesday, January 19th, and tomorrow is the inauguration day. The market was celebrating the new progressive administration with great hope of large spending coming in. S&P 500 was up over 0.75%, closing just shy of 3,800. Probably will test that overnight. And NASDAQ was up over 1.6%, closing above 1,300. And it's up even more after hours based on good Netflix earnings. The markets today liked Janet Yellen's comments in her prepared speech. She was very supportive of the proposed, of spending that may come with Biden's administration. And she has implied that the rates are going to stay low for a while. And she's maybe even considering 50-year bonds. And of course, the market ignored the negative stuff she has said, and there was plenty. For example, she supports higher corporate and personal taxes, as well as a very interesting part. She's considering capital tax gains on unrealized gains. So I don't know how that goes. She also had lots of negative stuff to say about cryptocurrency, but of course, it didn't hurt Ethereum, which surged today to new record above 1,400, all new time highs, and was up over 15%. Also, a fun note on the exuberant front, there was a TikTok video circulating over the weekend where a beautiful, very strangely bright blue-eyed couple was giving out their trading secrets, how to trade. And the secret is really very easy. And I practically quote, they said, buy when the stock is going up and you just sell it when it stops. That's it. So maybe, Victor, we should just wrap up our podcast right here with that sage advice. What do you think?
Well, I admire someone who has a system that works for making money. I'm sure you would make an even more attractive pose on TikTok than the young lady who, how old was she?
Somewhere mid-30s, I'm guessing. And they probably were running their video through some filter. The eyes were like sparkling blue, like alien blue. It's kind of fun, I guess.
Well, we have a lot to compete with.
Yes.
Okay, well, today was a perfect example of one of our major principles. The purpose of markets is to take money from the weak, give it to the strong. The Goldman reported its earnings, and they made more than ever before from trading stocks. Same with Citibank and Morgan's, JP Morgan. They all made their maximum. Well, how did they make their maximum? Well, they just were able to hold whenever there was a bad day, like on Friday.
Right.
Very, very bad close, down 1%, down 25 points in the last 5 minutes. And who would be able to hold that except someone with infinite amounts of capital? So along those lines, my friends at Millennium, Mr. Simons, reported that their major system, which apparently is $50 billion worth of their funds, lost 30%.
Wow.
That's the That's the part that the public is able to go into. But the part that their employees can go into, which is $5 billion, that was up 78%. So there, in a nutshell, is a story of the ecology of markets. The public lost 15 billion, and the employees gained 2 billion. So there was a net loss of $13 billion. Now, during the day, the weekend, they reported some posts that our friends from the social media company that has banned Trump, they pointed out that they maintained a lot of posts like kill Trump and hate him, assassinate him. They retained all those posts, but they didn't retain,
Right.
but they removed him from their platform because he felt that the election was not fair. So what the thing about that is that there's another factor that comes into play here. Tesla stock keeps going down. It's now 844. It was 855. NASDAQ is within 0.5% of its all-time high, and it's up about 1% on the year. By the way, the S&P is up 1% on the year. Those are very indicative numbers because sometime around the end of the month, the people who believe in total malarkey and things that are completely random are going to start saying, well, if the first month of the year is up, then the next 11 months are going to be up. So that usually there's a battle near the end of the year. Will it be up or will it be down? And all the fakers and people who use pseudo patterns are going to be saying that if it's up, that will be bullish. If it's down, it will be bearish. So there'll be a fight. So usually near the end of the month, there's oscillations between up and down. But in any case, there's no evidence that the first month of the year is predictive of the next 11 months, or that the first week is predictive of the next 51, or that the first day is predictive. Much closer to home, sometimes there's some evidence that the first minute of the trading day is predictive of the next next 8 hours. they say that in basketball, the team that scores the first basket is something like 57% to win the game, or 63%.
Interesting.
But the first basket, the first hour, the first minute is important. I look very closely at the first minute of the Nikkei as a predictor of the stock market. Doesn't always work. Like last Friday was typical example of. So what else was happening? I wanted to make a point about sports betting. I've always said that the sports betting handicappers are much more sophisticated than all the stock market forecasters. Here are some of the things that they look at. They look at the same way we look at round numbers. They look at numbers. The top teaser this weekend is the Ravens, because +3 to 9, because it allows you to get above and pass through the two biggest key numbers, 3 and 7. And we've also seen some respected money hit Baltimore, dropping the line from +3 to 2.5. This means you are on the side of sharp action. Well, it would be nice if you could be on the side of Goldman Sachs and the banks. Now they say the key numbers for totals aren't nearly as important as the key numbers for spreads. But there's some sharp money hitting this under. But, and here's something that they take account of that we don't. Weather could play a factor here. The current forecast calls for the low 30s, 15 to 20 mile winds and some snow. But, so that changes the expectations on the unders. Up, and then it's a sharp reverse line movement in the Rams game. There's an overload of both pro and Joe money on the Kansas City Chiefs. And it hammered this over to driving it up from 54 to 57. The weather overcast shouldn't be an issue. Anyway, they look at categories. It's sort of like in my day, they had something called the automatic interaction detector that splits
Right.
the outcome, and it categorizes it by 10 different variables, and like what it did the previous day, what bonds did from open to the hour, what the movement from the year to date is. They do all sorts of things, and they look at the changes and trends. I reread the book The Selfish Gene over the weekend by Dawkins. And in it he talks about how the gene is the main it's a main determinant of heredity and how one gene can change the phenotype. And in our case, that would correspond to looking at how, not at the total price, but looking at one number, like the last digit, like now it's at a 94, so the last digit would be 4. And he finds that the particular gene has much more to do with the outcome than the total makeup of the organism. I'm reading a good book by Ridley on the great essays on evolution. And he makes they make the point that everything is based on adaptation, that there's natural selection of the outcomes that are better suited to survival, and that are inheritable, and that create a greater frequency in reproduction. And if you have those 3 aspects, reproduction, aid to survival, then and heritability, then the species will change in the direction. And so that's why we find in life there are so many things exquisitely adapted to survive. The same is true in the market. There's an exquisite movement. I think we saw an example of that with how the public made so much of a contribution. I think they'll make more of a contribution. I don't like the fact that the European markets are much worse than the U.S. markets. Once we hit the round number, I wouldn't be surprised to see the market go down. Of course, one never wants to go against the 50,000-fold a century drift, but again, it won't be as bullish very shortly.
Does this have anything to do with the red and yellow colors that you had on your website, or is that any?
Yes, it has a lot to do. There was a big decline on Friday, and strangely, the bonds managed to stay unchanged today with all that.
Right.
With all that unprecedented congressional spending, substituting for the private sector, the bonds went down. I note that in Biden's proposal, he wants to raise the minimum wage to $15. So now in my day, and I think every every economics student, the two learn two principles: that the higher the price of something, the lower the demand for it, and the more money is created, the more we have inflation. Now, both of those principles have been arrogated. Biden said that there's no evidence whatsoever that increasing the minimum wage leads to the closing of restaurants. Now, how could someone be that ignorant? I mean,
It's beyond.
In some hand calculations, for a typical restaurant that has 5 workers, a tipped employee is only guaranteed $2.50. But as part of the Biden proposal, all tipped employees would receive $15 minimum wage. Anyway, it would cause
Right.
about $100,000 extra in salary, to say nothing about the reduced revenues from people who don't wish to spend 25% more on eating outside. So it would create a tremendous diminution in business. And what's the offset? Well, the government proposes to pay $15,000 in PPT to all restaurants like that. Now, how carry that over to the entire economy? How are the businesses supposed to survive?
Right.
They're talking about the right to work, making the right to work laws illegal, that and pension plans will be increased. Oh, the one good thing is that the more Twitter goes down in price, there'll be more of an incentive for the board of directors to come in and say, look, you know, you're welcome to have your polemic and your views that all woke is good and all MAGA is terrible, but you're hurting your employees, you're hurting our stockholders. Eventually, you're going to have to stop. So that will be the one offset to continuing. I mean, normally, when you're hurting your own stock and you're losing, I'm sure that his net worth has declined by $1 billion in the last 2 weeks because of his punishment of the Trump supporters. So eventually the board of directors and employees are going to say, hey, what's happening to my bonus? So that will be the offset.
Hopefully. Yeah.
What's happening on the scientific front today?
The scientific front. Well, a few things. You have mentioned Tesla stock today, that it hasn't been going up for probably at least a week, if not more. So Elon Musk last weekend was trying to pump his stock yet again by proposing a tunnel under Miami this time, in my neighborhood, kind of. And of course, it's a little bit absurd because Miami is basically built on limestone. You can't, I mean, it's so porous, there is water everywhere, swamp. To build some boring tunnel under Miami, it's going to cost insane amount of money, but that doesn't stop Elon Musk from pontificating. He already had a few other ideas that he was supposed to build tunnels under, from New York to DC in 20 minutes, from LA to San Francisco in 20 minutes or whatever. Now he moved on to hypothetical tunnels under Miami, which is even more absurd. So he's trying desperately to bring his stock up by giving new ideas for why to run it up.
Yelena, do you watch football?
A little bit, not much.
Your
It got
husband?
too woke for me. Same thing. We used to watch it occasionally, but now it's all woke, kneeling, who's singing, who's standing. It's like, it's not worth it at this point.
Well, I find that the level of quantification in football is much higher again than the level of quantification in the stock market. It's much more useful also. And when I watch the football, which is very rarely also, but for different reasons, I see the 50-yard line, which is midfield,
Right.
as a key to the game, the same way the 50 is key to the stock market. And as one team advances from the 50-yard line to the goal line, which is the round number, let's say 4 downs take 5 minutes. Every 5 minutes, if the market doesn't move for a first down, the other team gets it and it moves back to below the 50-yard line. So I looked at all the times that the market moves above the 50-yard line, and when it gets to the red zone, which is 20 yards from the goal, what are the chances that it will go in? There are certain teams that have a great record of moving from the red zone to the goal line. Some teams are good in defense. But I find that a very useful way of analyzing the stock market. And it's in line with Dawkins' The Selfish Gene, of looking at, forgetting about the fundamentals, but looking at the price itself, where it is where the ball is on the field, 10s, 20s, 60s, 70s, as a gene that will determine the outcome. Anyway, I've been working on that, and if when we interview Sogi, I'll present the statistics on what happens when we're in the 40s to 50s. And unfortunately, like everything in the market, it's always changing, the same way evolution is always changing. The results are very different for when you hit a 40 at the open versus 40 at the close. Like right now, we're in the red zone. We're not only in the red zone, it's first and goal, first and 6 yards for a touchdown for the stock market. Now, what are the chances that a good team will get over the goal line? And then given that at the end of the first half they're within 6 yards of the well, at the first, if they don't get it, then
Right.
then there's a new kickoff. Anyway, there are all sorts of interesting things that you can gain from the football thing. But in any case,
Well, speaking of football, there is another interesting thing happening. We have this first female football player, apparently Sarah Fuller, who's been invited to Biden's inauguration and going to participate in it, which is again kind of ironic because they're making a big deal out of nothing, because you really cannot, by any logical reasoning, have a female football team ever win anything against a male football team. Yet somehow they make the whole gender issue important again. It's all about, it's not about credentials anymore. It's about what color your skin is and what gender you are. That's how they define progress. Progress is not accomplishing something, but accomplishing more females, more people of color in the administration. Like, for example, now we have the first transgender person in the administration. Ironically, assistant health secretary. So it's all about the woke agenda. It's not about real.
We have a cancel culture, and the cancel culture is designed to make everybody feel small and feel ashamed of the heritage of the Americanism. And all the power in Washington, all the spending to all the lockdowns of business are setting a terrible precedent for the future. As we've said before, we're in a topsy-turvy world. And as soon as we go through the round number, we've gone actually 8 whole days without a 20-day maximum, and the maximums in NASDAQ occurred on on 108. So we've gone, the maximum was 13,114. There's one sort of constructal thing that happened today. The NASDAQ closed above 13,000. The Nikkei is closing in on 30,000. The Japanese are put a lot of emphasis on symbolic numbers. When I was at the Tokyo Stock Exchange, I noticed that they had songs for every hurdle, that every vivid number that an individual stock. So I imagine there'll be great singing, a lot of jocularity. We should actually, if we had any more readers, we should take a trip to the Tokyo Stock Exchange and film the actual event. The question is, like, when you go up from 28,000 to 29,000, what are the chances that you'll go up 1,000 before you go down 1,000? I think they're very high. Same thing for the U.S. stock market. That's just a very good way to calculate the Dow. Anyway, we've covered a million different things today. Wish one could be more succinct, but it's a topsy-turvy world.
Yep. And I just want to share, before we leave, one more chart that I saw over the weekend, which you have talked about before, a couple of days before, about this SPAC, special purpose vehicles. And you could see that in the year 2020, compared to the previous decade, the amount of capital raised via those vehicles is just simply staggering.
And
but
their stocks of all the special purpose companies have gone through the roof.
right. Yes, I have. So whatever that means, I don't know, but I just found that very interesting from Goldman Sachs, nonetheless. Maybe that's why they're making so much money by helping people issue SPAC vehicles, special purpose.
Well, for sure, they will continue to make money and will be leading from behind. But of course, you have to temper everything, all the topsy-turviness with the 50 to 60,000 fold. So as we've said in many of our podcasts, never short, but you certainly do a lot better when the market's going down than when you're going up, when it's going up. Okay, thank you very much,
Thank you.
Sennett. Try to have something interesting for tomorrow.
Have a good evening. Bye-bye.